Hi students, welcome to my YouTube channel. In the last class, we learned about the profit and loss appropriation account, partners capital account under fixed and fluctuating method. Today, we are going to look at the most important problems and solution on this chapter. Look at this question written on this board. Let me read this question first. Anil and Sunil are partners in a firm, sharing profit and losses equally. On 1st April 2000, they contribute rupees 50,000 and rupees 40,000 respectively as their capital. Sunil get a salary of rupees 300 per month. Partners are allowed 5% interest on capital. Anil and Sunil withdrew rupees 3,000 and rupees 2,000. Interest their own rupees 200 and rupees 100 respectively. The profit for the year ended 31st March 2001 for rupees 20,000 before charging above adjustments. Prepare profit and loss appropriation account and partners capital account. Two accounts should be prepared on this question. How to prepare? First one, profit and loss appropriation accounts, and second one, partners capital accounts. If any method can be adopted, if not specified, that is purchasing capital or fixed capital. Then first one, profit and loss appropriation accounts. How to prepare? For profit and loss appropriation account for the year ended 31st March 2001. That is year end 31st March 2001. There are two columns. The first column is particulars, second amount, then particulars, then amount. First, on the credit side, by profit and loss accounts, that is profit rupees 20,000. Then next interest on drawings, Anil rupees 200, Sunil rupees 100, total 300. On the left hand side, interest on capital, Anil rupees 50,000, Anil's capital rupees 50,000. That is interest on their capital at 5% per annum. 50,000 into 500, 2,500. Sunil, 40,000 into 500, that is 2,000. Total 4,500. Then next, Sunil get a salary of rupees 300 per month. That is 12 months in a year. 300 into 12, that is 3,600. Then balancing figure 12,200. These are final profit. These profit should be shared among the partners in their profit sharing ratio. The profit sharing ratio, that is equally, that is 1:1. But Anil gets 12,200 into 1 by 2, 6,100. Sunil gets 12,200 into 1 by 2, 6,100. Total 12,200. Then next one, partners capital accounts. Any method can be adopted if not specified. In this question, partners capital account under purchasing method. First column date, second column particulars, third column amounts. There are two partners, that is two amount columns. Anil, Sunil. Date, particulars, Anil and Sunil. First item, bank. The capital contribution 50,000 and 40,000. Interest on capital already stated in profit and loss appropriation account. That is 2,500 and 2,000. Sunil's salary already stated in profit and loss appropriation account 300 into 12, 3,600. Then profit and loss appropriation account 6,100 and 6,100. Drawings 3,000, 2,000. Interest on drawings 200 and 100. Balancing figure 55,400 on Anil and 49,600 Sunil. These are the balancing figure. On the opposite side, the balance is brought down. That is 55,400 and 49,600. These are the profit and loss appropriation account and partners capital accounts. Then let us see the next question. Look at this one. Jam and Rahim are partners in a firm, sharing profit and losses in the ratio of 3:2. On 1st January 2010, they contribute rupees 60,000 and rupees 40,000 respectively as their capital. Ram get a salary of rupees 500 per month. Partners are allowed 10% interest on their capital. Ram and Rahim withdrew rupees 6,000 and rupees 3,000. Interest their own rupees 500 and rupees 300 respectively. The profit for the year ended 31st December 2010 for rupees 20,000 before charging above adjustments. 20,000 before charging above adjustments. Prepare profit and loss appropriation account and partners capital account on the fixed method. Two accounts should be prepared on this question. First one, profit and loss appropriation accounts. That is profit and loss appropriation account for the year ended December 31st, 2010. Credit side, first item, by profit and loss account, that is 20,000 before charging such a commission, such as interest on capital, interest on drawings, partner salary, etc. That is 20,000. The next interest on drawings 500 Ram and 300 Rahim, total 800. On the left hand side, interest on capital, Ram's capital 60,000. 10% interest on their capital are allowed. That is 60,000 10 by 100, 6,000. 40,000 10 by 100, 4,000. Total 10,000. The next, Ram salary, that is 500 per month. That is 500 into 12, 6,000. The Ram's balancing figure 4,800. The profit share ratio, that is 3:2. Total 3 plus 2, 5. Ram 4,800 into 3 by 5. Rahim 4,800 into 2 by 5. Ram 4,800 into 3 by 5. Rahim 4,800 into 2 by 5. That is 2,880, 1,920. These are the profit and loss provision account. Then next, partners capital accounts under fixed method. Fixed method, that is two accounts are prepared. Partners capital account and partners current account. First item, capital accounts. Only capital accounts are entered on this account. That is bank 60,000 and 40,000. The other adjustment such as interest on capital, interest on drawings, partner salary or commission, share of profit or loss will be made in the current accounts. That is credit side, interest on capital 6,000 and 4,000 already stated in profit and loss appropriation account. Ram salary 6,000 already stated in the profit and loss appropriation accounts. Then next, share of profit 2,880, 1,920. Then on the debit side, drawing 6,000 and 3,000. Interest on drawings 500 and 300. Balancing figure 8,380, 2,620. These are the two accounts. That is one is profit and loss operation account and one is capital account under fixed method. This class will continue in the next video. If you like this video, please like. If not subscribed yet, subscribe and click the bell button to get a notification on the latest video. If you have any questions or suggestions regarding this topic, please let us know in the comment box or email address. Thanks. See you at the next